Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, the Australian share market continues to push to new record highs. Thomas Atkinson from FX Evolution points out that the ASX 200 recently fell to around 8,400 points and then found some strong buying.
Viewers will see that we have that really strong high at just above 9,000 that was just closed against in terms of the daily. It is pulled back a little bit since then, but realistically, if this weekly holds up, so let's say today ends up, maybe neutral or closes kind of, semi-neutral, this is actually a fairly strong breakout, and it kind of suggests that the Australian market has at least got some buying behind it at this stage from the funds. So yeah, I like what we see. It's a triple kind of resistance. It's broken up at this stage, and if that does confirm, then that's a positive sign for Australian stocks, hopefully for the coming weeks.
Meanwhile, on Wall Street, the tech sell-off has been the story of the past few months. Thomas Atkinson looks at the rotation out of tech stocks with technical analysis of the MAGS 7 ETF.
This is actually the exchange-traded fund for those top 7 stocks. And what we'll notice down the bottom is there's this blue squiggly line that's going up, and basically that shows the S&P 500 and the advanced decline line. So effectively what that is telling us is that more stocks are actually going up than down, but meanwhile the S&P has not really done much, and that's because of the weighting and concentration of these big tech stocks. So I kind of see like it's an abundance mindset in terms of markets at the moment. There's plenty of opportunity, but it hasn't been a big tech. And I think for really the markets to move up, in terms of big percentages, we're going to need to see tech come back into focus, and that's going to need to take that higher. Basically tells us that the index is not the best place in terms of trend or a trend at this stage. You've got kind of like a low and a high, and you have like a market that's ranging in between both of those. We don't have, of course, a breach either way. So I've got it between 6,800 and 7,000, and I know that when I do the analysis on 7,000 for the S&P, what I end up coming up with is a ton of options positions sitting there and at 6,800. So that's basically what's actually containing this market. And if we do breach either side, we may see an explosive move. So that's the real potential here, I think, for the market. The longer it stays in this range, when eventually it does break out, it could be quite explosive.
Bitcoin is often seen as a forward indicator of market sentiment among risk assets. Carly Garner from DeCarlyTrading.com says Bitcoin has been pretty reliably correlated with the S&P up until recently.
It's been pretty reliably correlated with the S&P. In other words, I think it's fair to say that it's a risk asset. So anytime we see sell-offs in Bitcoin, we tend to see the S&P 500 or stocks in general follow suit. Now, this particular cycle seems to be a little bit of a delay or a lag. It's taken a little longer than usual. It normally, the normal pattern is we see Bitcoin top or bottom about 1 to 3 months prior to the S&P putting it at top or bottom. This time around, we've seen a much longer delay, but I think the result or the end game is going to be the same. You can see in how wide the spread is between Bitcoin and the S&P in this chart. The S&P is the green on the top, and Bitcoin is the red declining line. And if history serves itself, we should see the lower Bitcoin price eventually weigh on the S&P, maybe even in a substantial way.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.